Machine learning algorithmic trading utilizes advanced statistical models to analyze and predict market trends, enabling automated trading decisions. Machine learning applications in trading have revolutionized the financial industry, enabling more efficient and accurate decision-making processes. Advancements in predictive modeling and data analysis have revolutionized various industries by enabling more accurate forecasting and decision-making based on historical data patterns and trends. The integration of deep learning techniques in algorithmic trading has revolutionized the financial industry, enabling more accurate predictions and faster decision-making for traders. Deep learning algorithms can analyze large volumes of data, identify complex patterns, and adapt to changing market conditions, resulting in improved trading strategies and risk management. The implementation of machine learning has revolutionized risk management and portfolio optimization by enabling more accurate prediction and proactive risk mitigation. Reinforcement learning has the potential to revolutionize trading strategies by allowing algorithms to learn from experience and adjust their actions accordingly. This can lead to more adaptive and efficient trading decisions, potentially increasing profits and reducing risks. Ethical considerations and regulatory challenges play a crucial role in the implementation of machine learning algo trading. As these algorithms make autonomous decisions based on historical data and complex patterns, there is a need to ensure that they are fair, transparent, and accountable. Moreover, the use of sensitive information and potential market manipulation pose ethical dilemmas that require close monitoring and ethical guidelines. The future of machine learning algo trading is poised for significant growth as advancements in technology and big data analytics continue to enhance algorithmic trading strategies.